pay fair lending, which means I make sure that the bank is in compliance when it comes to lending in all areas and to all demographic groups. So we, and every bank has them. Whether or not they're following it is a completely different story, but compliance is something that all banks are required to do. And that's why when I moved out of community banking a year and a half ago, I was put into this job, and I'm very happy to do so. But one of the things I kept seeing as I looked at the data, and if you don't know how this works, every bank is required to submit a great deal of data every 3 months to the federal government. It's called government information reporting, and they're call reports. So all this data funnels up, and it all gets updated every year. The data just got updated from 2016 at the beginning of this month. So things have changed. In conjunction with that, all the data that gets collected every 5 years, I know you think that the census is done every 10 years. The census is technically done every 10 years to do reapportionment and to actually define how many members of Congress we get. However, there's this thing called the American Community Survey, which is done every 5 years, which actually updates how many people live in certain areas. And the ACS data from 2015 was just updated at the beginning of this month. So we now have updated data for how many people are in Houston, how many people are in Harris County, and what is going on everywhere. So as we look at the hole in the financial system, someone asked me, how do we relate this to people? And I go back to what happened last year. Tim Ogg was one of the most successful candidates we had in Harris County. In fact, other than Hillary, she got the most votes. You know how she did it? She talked about something that mattered to people who rarely vote, and they came out and voted. What was it? Criminal justice reform when it came to marijuana. And what was the first thing that she did when she was able to in the courthouse was she basically decriminalized it for small amounts. That made a huge difference to a number of people, and that is how you connect to people. So, what does this have to do? What does this topic have to do with them? Currently, there are things that are called banking deserts in Houston. There are areas of the city which do not have enough banks, and that has a detrimental impact to how they live their lives. I brought a map, I'll hold it up, and so to kind of illustrate where this goes. This is inside 610. Northeast 610 does not have enough banks. The East End area does not have enough banks. South Central Houston does not have enough banks. Those are low to moderate income areas, and they also happen to be high minority areas. So while those are two distinct buckets, they do overlap in a lot of cases. And so when you don't have enough banks, you force people to choose alternate means of getting financial services. And the number one area that they turn to is a payday loan. And now we're talking about, and we need to talk about two separate things. There's the services bucket, and then there's access to credit bucket. Services bucket means I need to cash a check, I need to buy a money order, I need to do some basic stuff like that. There are ways to fix that with technology. There are ways, but one of the key things is you need to put physical places where they can do so that's easy to access by transportation. Because you also have the impact of how many people can get to banks where they are to cash a check without paying a fee. The other part is credit. There was a survey done by the FDIC, and the FDIC does a lot of surveys. It's called the underbanked and the unbanked survey. And the good news is the unbanked and underbanked have fallen as a percentage of population for the last 4 years. Unfortunately, that drop has not happened as much in communities of color. And in fact, no one knows why. Instead of dropping in the Asian community, the unbanked and underbanked have gone up. Not significantly, but it's enough to actually be outside of norm. So we're looking at communities who don't have services to them. And this has a detrimental impact on their fees. One of the things that FDIC found, and they've reported this, is when people need a loan, people who are living paycheck to paycheck, what they're finding is on Wednesday, and just imagine they get paid weekly, they're finding that on Wednesday they're short about $26 to get to Friday. And so what are they turning to? Payday loans, because they need to cover that gap. Well, payday loans, the interest rate on payday loans isn't really regulated. And as such, they're paying about 400% interest on a loan. So that comes out to about $2,400 a year in interest when you need $500, because it's about $500 is the average loan that they're getting for that small gap that they need to get. And then they roll it over and roll it over. And one of the things I found as a bank officer, when I was a line officer, not in compliance, was the moment you saw someone's bank account get hit with the withdrawal, the automatic withdrawal from a payday loan, you immediately knew that this customer was in trouble. And by that point, there was very little the bank could do. So, one of the things that I think that we need to do, and one of the things that is I would have preferred to do, was to reinvent the postal banking system. It was around and was dismantled in the 1960s because of the rise of the Federal Deposit Insurance Corporation. People began to realize that their monies were insured, so they had more faith in the banking system, and therefore the postal banking system no longer needed to be around. So it was dissolved in the 60s. But right now the post offices have seen a decrease in foot traffic, but post offices are just about everywhere. So if you can begin to look at those areas that have very few banks, but have a building that has use for it, you marry those two, because people already go to the post office to buy money orders. It's one of the few places you can get a money order without a problem. So you try to marry those services and put them in there. And you don't have to do it to every one of them, but just in those areas that lack financial services. The chances of that happening in the current political environment is not even going to put a number on that. So then there's the alternative that I've looked at, and it's called a public bank. Mayor Turner has this thing that he calls complete communities. And we have multi-service centers. Or we have, the county has areas like the Palm Center in Southeast Houston where you have the constable's office, you have a court office, you have a public library that used to be right there. They try to marry services together. The City of Houston's Office of the Comptroller has a program right now called Bank on Houston. They talk to banks and try to get non-service accounts for customers, so that people who normally don't have a bank account can come in and actually open a bank account with no fees attached, and therefore they can cash their check and they can try to build savings or something along that line. But it doesn't actually have a component where there's a credit part. Because when you're looking at, and I'm backtracking a little bit, one of the reasons why it's so hard to get, there's not banks in some of these areas that need them, but the other thing is it's extremely expensive for banks to put a loan on the system, and that's why the minimum bank loan is usually $2,000. Well, they don't need $2,000, they just need $500, and then you get these long payments, and so the actual mechanism that they need is not available. Because banks have to get a waiver to offer that level of service, and then banks have to service that loan, and it's just not profitable for them. And remember, banks are for-profit institutions. But if you put banking services in a public institution, then you don't have to worry about the profit mechanism. You just have to avoid the loan loss level. It's a different formula. So that's kind of why you look at finding services that you can put in places that actually impact people. So, candidates, it's something to think about, something to talk about. The City of Houston is willing to look at alternate ways to get people out of this to go to the bank for the first withdrawal without a fee. But if you're going, but say you're banking with, say, Allegiance Bank, which has 7 locations in the city, then you're forcing someone who might not have the right transportation to find an Allegiance Bank to do that first withdrawal. And you also, okay, say they got paid $637. The most they could get was $620 because it only dispenses in 20, so $17 is sitting on that card. So you can't get the whole amount. Now I do know one of the things that happened, and it's sort of related, was the rule came down that because gift cards and all those cards, what they were doing was after 6 months they were charging you a fee that was beginning to accumulate into the card, and when you did all what was left. The rule is now that they can't charge you a fee after 2 years, and then if it's on the 3rd year, it goes inactive. So they can only charge you a fee at one point for unused card. But again, that was a regulation that CFPB had to get through. And one of the things I need to backtrack to CFPB, because this week it was mentioned, there's a rumor that Richard Corday, the director of the CFPB, that Harry Reid had such a hard time getting confirmed in the Obama administration, is thinking about running for governor of Ohio. If he does so, that means he has to give up his seat there, which means that Donald Trump will have the ability to nominate the next director of the CFPB.
Oh, God.
So that's bad news. Yes, sir.
Question. So with the public banking option, I understand how the big banks would be on board with that, but what would be done as far as like lobbying for the payday loans? Because that would be the direct competitor, and they would not like see that.
Well, and one of the things I did put in the handout was Houston passed a city ordinance a few years ago that outlawed, that strictly limited payday loans in Houston. And last year when I talked about this, there were 500 and something. This year when they updated the number, there's 200 and something, so it fell in half. Unfortunately, Houston isn't all of Harris County, which means they just move out to unincorporated Harris County and set up shop there, and people go to those. You're right, it is a huge issue. It's probably on the state level that they would have to fight the regulation. I was told that one of the state reps in northwest Harris County actually owns several payday lenders, so you have to fight with him about doing that. However, Al Green sits on the financial services, the House Financial Services Committee, so if we get a majority, we can kind of tell Al that we really want banking reform, and he sits in the one place that actually can do banking reform on the local level. So there is that happening, but it's literally a fight on the federal level versus state level. And I don't know how you're going to get it through the state without taking out that rep that owns so many of them, or you have to make them divest because that's a direct conflict of interest. But in Texas, direct conflict of interest with the state reps. Exactly. Any other questions? None?
Oh, I have one
Yes.
question. You mentioned earlier on in your comments about Wells Fargo. I noticed that if you go into grocery stores, Wells Fargo tends to set up house there.
Mm-hmm.
Are they under different regulations?
Mm-hmm.
Do they get the advantage of cutting their costs because?
I used to work in one of the, they're called in-store branches.
Yes.
One of there is, the thing about the in-store branch is your overhead is lower because your security is based on the store as opposed to you. You also don't get the benefit of a safe deposit box, which is a service that a lot of people really like. The other thing is though you have to extend your hours because you're usually open longer, but there's not any measurable difference. I know because the FDIC lists deposits in there, I looked to see how much was deposited at my old location, what their basic balance was, and it has $80 million in standard deposits. So.
Well, one would think, well, do a grocery store, but that's another problem in these areas.
They don't have grocery stores.
They don't have decent grocery stores for people to even eat.
In fact, Bank on Houston, that I was talking to the city controller's office, they overlaid where the banking deserts are, and you overlay the grocery bank, the grocery.
They're the same.
They're the same. And again, it's primarily low minority, low to
Right.
moderate income areas, and high minority areas. Cassandra?
Yeah, I guess, hearing all this, particularly when you're giving just these great statistics talking about just the lack of banking for black and brown areas, a big problem is the fact that because a lot of these communities have a large number of recent immigrants who, just because of their filing status, have not received social security numbers yet, green cards yet, even though they're here legally, cannot open up bank accounts. How do we help these people? And one thing I wanted to add, because of that, there are thousands of people that are essentially banking outside of our traditional mainstream networks by doing kind of like their own co-ops with their churches, and they have their own system that is effectively serving their needs, but essentially they're giving loans to one another, to large groups and whatnot, but they're not able to showcase that credit advantage.
Mm-hmm.
How do we take these alternative banking systems, these true like community banking systems, and put them into our mainstream?
For that group, I would say, if it specifically was done through a church, get them to start forming a credit union.
Yeah.
They're regulated differently. They belong to the National Credit Union Association, but they fall under the umbrella of all the other regulatory agencies. But you become a member, your insurance is through a different mechanism, but it would do, in other words, they get credit for all that stuff that they're doing. It's just that it would then be regulated for them. Now, as for the undocumented or the ones who simply can't open checking accounts, that's why instead of them going to ACE check cashing and stuff like that, you at least let them go. The chief of police made a very good statement at Meyerland the other day when he said that allowing undocumented or immigrants to get driver's licenses is a good idea because at least you also, then they'll buy insurance, put them in the system. The more you alienate people, the more you're creating a lawless, you're encouraging lawlessness. By allowing them to get into that point where they can cash a check because they have an identity without the $10 fee, it's maybe $1, then you're saving them money and you're also keeping more money in circulation in that community. But it's an issue. But that's how you...
So is there anything that can be done as far as just like regulations that can help open up that access so that people who have different forms of identification...
Well, exactly. We're getting the weeds here. Every bank has what's called Bank Secrecy Act policy. It governs how, it basically says, as a bank, and it has to be signed off on by the board of directors and it's reviewed by regulators. It says, we accept these identifications. And a lot of banks in Houston were accepting the matricular card, which allowed a lot of people to get bank accounts or cash checks without a problem. But then there were some issues with whether or not matricular cards were being forged and stuff. So, in other words, if we can work with consulates and we can work that way to make sure that people who are here have a form of identification that allows them to do that stuff, and banks accept it. And that's the issue, is working with banks to accept those forms of identification, then you go forward. Because banks accept handgun licenses.
Yeah, but they can't accept your
But they also, some banks, I remember, the problem is, okay, backtrack, and I'm old enough to remember how this went. In the 90s, there was this thing that was called Know Your Customer. It was not regulated, it was highly suggested. In other words, the idea was you knew exactly who you were banking with. So you had their ID and all that stuff. 9/11 happened and Know Your Customer became a regulation where it said you cannot do business unless they have a valid ID, and that's where BSA regulations came in and said you have to list them, you have to know exactly what's going on. So that's part of how that rolled out. Yes, ma'am.
I just want to comment on something that was brought up about churches giving credit, and you mentioned form a credit union. I personally would have a hard time I'm in education, and you have churches forming